A central bank and BlackRock teaming up on one of my altcoins. I wouldn't have believed it either until I saw the evidence. So one of my sleepy crypto holdings suddenly shot up 70%, and I found myself chasing a trail of clues that led straight to some of the biggest names in finance. This isn't your average crypto news. This is a story of a silent giant, and what it means for your portfolio. If you're interested in this topic, hit the like button, subscribe, and type interested in the comments. And I will give you a heart. Let me set the scene. I'm checking my phone, and I see Hedera, the HBAR token, absolutely ripping upwards. I'm talking a crazy 70% jump in just a few weeks. 70%. Now for a coin that usually just creeps along, that got my attention fast. My first thought was, okay, what did I miss? Did some influencer hype it up? Did Elon Musk tweet something weird? I needed to know why my HBAR was suddenly the star of the show. So, I started digging. I promise you, by the end of this video, you'll understand why this isn't just a random pump. This is a seismic shift, and if you're not paying attention, you're going to miss it. I start digging for the crypto news, popping into our free educational Discord server. The link, by the way, is in the description. I wanted to see if anyone else was freaking out about this. And sure enough, the Discord crew was buzzing. People were posting things like, "Did you guys see what Van Eck said about Hedera?" Now, if you're not in finance, you might think Van Eck? Who's that? But Van Eck isn't just some random Twitter guru. It's a huge asset management firm. These are the Wall Street types who trade billions of dollars. When they start talking about an altcoin, you know something is up. So, I pulled up this Van Eck report, and it was like a gold mine of institutional gossip. The report basically highlights that Hedera's network has been on a tear. And not just any tear, we're talking partnerships, big usage growth, and this phrase that stuck with me, broadening institutional legitimization. Now, my jaw is on the floor. Hedera was always a bit under the radar, and here it is getting love from a major finance powerhouse. But why? What is it about this particular network that's grabbing the attention of these titans of finance? And could this be the real reason for that 70% pump? To understand the payoff, we have to rewind a bit. If you haven't heard of Hedera Hashgraph, here's a refresher. It's kind of like the less flashy cousin of Ethereum and the Bitcoins of the world. But it doesn't even use a traditional blockchain. It's built on something called a hashgraph. Don't worry, I won't give you a pop quiz on it. The gist is, it's lightning fast. Its transactions cost like 1/1000th of a penny. And it's governed not by anonymous miners, but a council of big organizations. We're talking Google, IBM, Boeing, and a bunch of other corporate heavyweights, all literally running the show on the Hedera network. Some crypto purists scoff at this model. It's not decentralized enough, they say. But guess what? That might be exactly why governments and banks are so comfortable playing in Hedera's sandbox. It's a safe sandbox for institutional experiments. It's a public, but with guardrails approach that these old-school financial players trust. Let's get back to my investigation. Van Eck's report says HBAR soared 70% thanks to this wave of adoption news. They started listing examples, and the first one that nearly made me do a spit take with my coffee was the Reserve Bank of Australia. Yeah, the Aussie Central Bank. Apparently, they have this thing called Project Artica. A fancy code name for exploring tokenized asset markets. Basically, they're figuring out how to represent real assets like bonds or whatever as digital tokens. And guess which network they roped into this pilot? That's right. Hedera. When I read that, I had to double-check I wasn't on some kind of fanfiction website. A central bank using Hedera's tech? That's like hearing the Fed is quietly beta-testing Dogecoin. Okay, not exactly, but you get the idea. It blew my mind. And it gets better. This project isn't small potatoes. It's wholesale markets, money moving between big institutions, potentially using a digital Australian dollar or something similar. For Hedera to be in that mix is a huge stamp of legitimacy. But what happened next? What came after the central bank announcement? Well, that's when my entire worldview of HBAR completely changed. At this point, I'm already pretty impressed, but the Van Eck report was like an infomercial. Wait, there's more. The next example they dropped was Arcax. Now, unless you're deep into crypto or in the UK, you might never have heard of these guys. They are the first regulated digital exchange in the United Kingdom. Basically, a government-approved crypto exchange geared towards institutions. You can think of them as the bridge between old-school finance and the new world of tokenization. According to Van Eck, ARKAX announced it was going to be using Hedera for settlement. Settlement is just a fancy way of saying that when trades are done, the assets and money actually get swapped and finalized. If an exchange chooses your network for settlement, they trust it to move potentially billions of dollars reliably. Now that alone is pretty bullish. But then comes the kicker. In late July, ARKAX went ahead and created tokenized versions of real-world funds on Hedera. Not just any funds. We are talking market funds named after BlackRock, Fidelity, State Street, ABDINE, LGIM. I practically jumped out of my chair. BlackRock and Fidelity, they're like the Avengers of finance, and their fund tokens were showing up on Hedera's ledger. I was blurry-eyed at midnight, double-checking I wasn't hallucinating those names. It's real. The CEO of ARKAX even confirmed those tokens represent real funds that could soon be transacting in HBAR. Not only are those giant fund tokens on Hedera, but if they start moving around, they'd actually be using HBAR for the transactions. That is a dream scenario for an HBAR holder, legitimate demand from massive finance players needing HBAR to do business. At this point in my research, I'm pacing the room. I'm half excited and half in disbelief. I mean, how many times have we heard crypto projects brag about talking to institutions? And here, Hedera quietly has BlackRock's name in its transaction history. It's bonkers. Now if you're thinking, okay, but are these just one-off events? A pilot here, a test over there. I was wondering the same thing. And that's when another piece of the puzzle fell into place. Stablecoins. Van Eck noted that stablecoin usage on Hedera basically went parabolic. I'm not using that word lightly either. We're talking about the supply of stablecoins on Hedera's network hitting all-time highs and practically exploding overnight. The data showed that it was almost entirely USDC, which is Circle's big stablecoin. Let me break that down. Stablecoins are like the lifeblood of crypto. If a network suddenly has a ton more stablecoins flowing through it, it usually means more people are using the network for something: trading, lending, payments, you name it. In Hedera's case, the supply of stablecoins grew by over 400% in a single month, reaching roughly $200 million. This insane growth wasn't a coincidence. Around the same time, Hedera also got love in terms of exchange listings. Kraken Pro and Robinhood finally listed HBAR. This made it easier than ever for both retail and institutional traders to buy HBAR. The additional exposure and access undoubtedly helped to fuel that rally. But why now? And what does this tell us about the future of HBAR? It's time for a quick reality check though. I am not a financial advisor. Nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all of the money that you invest. You should always do your own research. This video is for entertainment and educational purposes only. With all these clues, the Aussie Central Bank project, ARKAX tokenizing BlackRock funds, stablecoin usage spiking, I started to piece together a bigger picture here. Hedera isn't just randomly pumping because of hype. It's pumping because it might be quietly becoming the go-to network for real-world finance experiments. It's like the world's largest companies and institutions all decided to throw a surprise party on Hedera, and now regular people are just starting to notice the noise. This isn't just some random crypto news story, it's a cohesive narrative of a project coming into its own. But why Hedera specifically? Remember how I mentioned the Hedera Governing Council? It's kind of like the who's who of respected organizations: Google, IBM, LG, Deutsche Telekom, and more. They literally run nodes and guide Hedera's direction. If you're a central bank or BlackRock, and you're a bit wary of truly decentralized networks run by anonymous miners, Hedera might feel a little more familiar or trustworthy. After all, it's public, but it's got guardrails. There's a boardroom vibe to it. I can almost imagine a banker saying, well, if Google and Boeing are involved, then it must be legit enough for us to test it. Ironically, this more centralized approach, which was once seen as Hedera's weakness by die-hard decentralization fans, is actually turning out to be its strength in onboarding big players. But here's the thing. This institutional validation could be a double-edged sword. Is Hedera becoming too reliant on these corporate heavyweights? And if so, what happens if one of those big partnerships suddenly falls through? That's a valid concern, but let's look at the broader picture. Hedera's ecosystem is much broader than just BlackRock and friends. They've got startups, a growing DeFi scene, NFT projects, and millions of daily transactions for things like supply chain logs and ad tracking. The institutional angle is just what's lighting up the market right now. As I wrap up this wild research ride, I realized it wasn't just about a token pumping. It's about seeing real, fundamental validation for a project. It's like all of a sudden, the adults in the financial world showed up to Hedera's party. And to me, that's immensely validating for crypto as a whole. It's a reminder that the innovation we've been excited about is starting to seep into the mainstream, even if it is a little quiet. In the end, chasing this HBAR story was a wake-up call for me. It reminded me to keep my eyes open for subtle signals, not just flashy headlines. For Hedera, this feels like a turning point. If this were a movie, it's the montage scene where the underdog athlete suddenly starts outperforming the champions in practice, and everyone's like, wait, this kid is the real deal. The big question, of course, is will the momentum continue? From where I stand, the trajectory looks promising. Hedera's on-chain stats are booming. Transactions have surged along with a stablecoin influx, and when you have more real economic activity on a network, that tends to reflect on the network's value over time. I'll be honest, before this, HBAR was just another token I held. I liked the tech, but it wasn't the most exciting thing in my bag. This whole adventure has changed that. I'm now leaning a lot more bullish on Hedera, not in a it'll go 100x next week kind of way, but in a this project might actually have some real, lasting role in the future of digital finance kind of way. I even added a little more HBAR to my stack. I feel like I've rediscovered a hidden gem that was in my pocket the whole time. I can genuinely envision a future where I'm using some finance app or playing a game, and under the hood, it's running on Hedera, and most users probably won't even know it. And that is kind of beautiful in a way, the tech just working seamlessly. We early nerds get to know exactly what's going on, and the mainstream gets to benefit without a hitch. And all of this started with me seeing one simple line in a crypto news report, a line that led me down this rabbit hole and revealed the most shocking connection in all of crypto, BlackRock on Hedera. This was my personal detective story, and I hope you found it as intriguing as I did. But this story isn't over yet. Now that we know about BlackRock, the next logical step is to see what the next major catalyst could be. What's the next big partnership? The next big announcement that could send HBAR even higher? I break down the next massive institutional move and give you the exact date you need to watch in this video right here. Click on it now, and I'll catch you over there.